Well, you're still optimistic about the market as a whole following a week in which we receive guidance from ARM, Western Digital, and now Intel and Microchip. Oh, no. I'm optimistic about businesses who are assisting Nvidia or have a significant presence in the GPU market. For less than $10, it's a steal. Get your Nvidia keychain as soon as possible. We are offering a huge discount exclusively to the first 100 orders. Uttered in a stupid manner. You see, on the Amazon conference call, they stated that Nvidia is sold out, demonstrating their complete awareness that they must invest in AI. They will most likely remain sold out until 2025. Indeed, the expenditure plans that we have heard and that have been confirmed by companies such as Amazon, Microsoft, Meta, and Alphabet haven't deterred anyone from believing that Nvidia will continue to be the main benefit. Have they? However, the market is currently undergoing a significant rotation. Consumers are worried about whether the Fed is falling behind, but it doesn't appear to change the main problem, which is that Nvidia may be sold out for a long time to come. Well, if you listen to Amazon, they have to make their own chips, of course, but that's a defensive tactic since they can't get enough, isn't it? You hear them designing their own chips. Yes, this is my perspective on Amazon. Given how awful the stock sounded today, I believe it's crucial. I would purchase it. Amazon must install hangars and purchase a large number of aircraft because they are aware of the high volume of business. You don't need passengers in planes right away when you purchase a large number of them. You have to wager that they're correct when they initially spend a lot of money purchasing the planes. I'm willing to wager that Jassy is correct. An alternative analogy might be that they are purchasing a Stradivarius, and you cannot simply learn to play it like a violin. Inferential reasoning is a little more difficult to teach and acquire. I'm merely looking for an analogy to help others realize that it's taking a while. They are upsetting people by not being able to just flip a switch. People are asking, "Are you kidding me?" when they bring up the Olympics. However, the nation is in the 2012 phase. They're not buying as much after all, and they're watching the Olympics. And the only reason they purchase is because they, not me, are watching the Olympics. Yes, I am aware that was strange. According to Jeff's message from today, customers are phoning to inquire about possible delays in Blackwell. Then, yesterday, we learned that the DOJ had contacted Nvidia's rivals who had been protesting. It's slower, actually. They never truly stated that it would ship in large quantities, but it is slow. So, many believe that it would ship in large quantities. They ought to return and speak with Jensen. He never stated that it will ship in large quantities at this time. Never. Yes, exactly. The question of whether there will be a return on invested capital remains. As an aside, the hyperscalers have consistently responded in the affirmative, and Jassy agreed. Remember, what about Zuckerberg? Indeed, he is discussing generative artificial intelligence. It will grow rapidly, according to Jassy, and it will mostly be developed in the cloud from the beginning, which, as you can see, enables those companies to keep expanding. There has been absolutely no update regarding the cloud. We should be concentrating on it, but we're all concentrating on the people who decide how to allocate capital. Just one thing, please. You can say a lot. If you were upset with me, I apologize. I'm sorry. Not angry. This is a huge day, so I got a little excited, but I regret it. I worked on the story of the AI revolution. Even though the market is showing signs of weakness, I think it is in good condition, and all of our checks indicate that now is not the time to worry. According to the FT, Elliott Management recently informed investors that Nvidia is in a bubble and that the hoopla surrounding AI technology isn't being matched by reality. I know you disagree completely. I couldn't be more at odds. We were here prior to conference calls and earnings, and I believe we even discussed it. Now let's examine the numbers. Examine the Azure acceleration. Take a look at what AMD's Lisa Su discussed. Regarding the acceleration they're directing for the second half, we observed what we believed Azure was indicating. That speaks a lot about realizing that this moment is now. And in my opinion, the haters are still hating. For the past few years, the bears have been there. I understand that in tech right now, it's simple to cry fire in a packed theater. Since it comes from more than simply the call, we are unable to view it. You see that the buzz is matched by the value. Nothing we saw here deters me from believing that the street is underestimating the trillions of dollars in AI capital expenditures that will occur across the tech industry over the next 3 to 4 years. No, Dan, you're correct. Hear me out, none of them are abandoning their capital expenditure plans. To get right to the point, AWS's revenue growth actually increased, rising by 19%. However, there is still the more significant question of whether you will eventually see that return on investment. Naturally, you think that will be the case, but what do you think will happen in the near future in terms of applications that will begin to allay some of the concerns that some investors would have from an enterprise standpoint? In a few weeks, the Godfather B. Jensen will share his thoughts. Currently, there are 45 times as many businesses and use cases on that AI road. These businesses are headed toward use cases in retail, insurance, financial services, and healthcare, in my opinion. As we have discussed, it all boils down to demonstrating the optimization. The investment is there, and based on what Sue, Nadella, and Sundar Pichai discussed, I believe that this change is taking place. The modernizing process has only just begun. With $2.2 trillion in what we consider to be the actual installed base, it would be like betting against Tim Cook to predict that there won't be a gap between capital expenditures and income. Considering the AI revolution that is currently occurring at Apple, that is a difficult wager. Do you think it could last a year? Would you become anxious if it didn't happen within a year, and if the rhetoric didn't change? We haven't seen the monetization from a software viewpoint, and we haven't seen it from anything other than the Magnificent Seven, the second, third, and fourth derivatives. If we sit here in January or February and we haven't seen it, I would say, naturally, we need to check into it if McDermott suddenly turns against AI. However, based on what we see, not just from earnings but also from our checks, it's really more encouraging right now. I've never seen anything bad about Bill McDermott. He has made a change in the past, but if McDermott, Sue, Nadella, and Cook see anything, I'll take them over those who are now stoking the flames. We've been seeing reports regarding the Blackwell chips delay and what it would mean for certain clients like Microsoft, Google, and Meta. How's that tail going for you? Do you believe this will make a difference? Regarding Nvidia, I believe that they might see a 90-day delay in the release of the Blackwell series chip. However, I believe that their technology is so advanced that nobody will be able to take market share in the interim. Therefore, it is theirs to take. Their revenues, in my opinion, will just be postponed for a quarter or two. The construction of some of the hyperscalers, as we refer to them in the United States, the 4 large corporations that are investing billions and billions of dollars in creating their AI infrastructure, will undoubtedly be impacted because they are the most crucial link in the AI supply chain. Sam brought up the issue of the hype surrounding AI, and I am aware that she touched on this subject. Although you have a strong outlook for technology in general, do you believe that pressure will increase to the negative if an activist fund manager with the stature of Elliott Management claims that AI is overhyped and these equities are overbought? I believe that we must differentiate between what I refer to as AI 1.0 and AI 2.0. I still had assert following